Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I will be your host here for about the next 25 minutes or so. We're going to have a little bit of a shortened version of Options Guide TV. Today, all I really want to address is some of the fig leaf positions that we have on in our paper trading portfolio. So, on Monday's show, we went and reviewed a lot of the speculative trades that we did around earnings. We did one in MRO. We talked about, well, I guess this would be less speculative, but a protective put in Apple. And Apple has thrived since earnings. So it was kind of weird. It's usually the case when everybody gets negative on something. And the sentiment is so bearish that it usually ends up being a bullish indicator. And I find that to be true in just many years of watching a lot of earnings. And we see right now that Apple's trading right up around 182. So that was a solid protective strategy that we did. Apple was at 171 going into earnings. We also did a long call spread in MRO. We went back and looked at a couple of butterflies around major stocks, mostly the Magnificent Seven. And now we've been adding to a portfolio, and we're slowly going to build a portfolio of stocks. And every month we're going to come in and look at selling some options against those positions. Oh yeah, one last other speculative trade that I did mention on the show on Monday was IWM, and I did put IWM in this portfolio, in the paper trading portfolio. We did a long straddle in IWM. It expires on the 17th. And I went in after the show was done and I closed out the long call side of it at a fairly big winner. As a matter of fact, the market was down a little bit. I probably would have closed it on Friday going into the weekend, but we ended up doing it on Monday and sold it for about $9.50. The total cost of the straddle was $7.35, and we still got the put hanging out there. So the put right now is trading at 47 cents right now in IWM. I think we're going to let that ride a little bit. There's a little bit of weakness in the charts, but I'm going to put a limit order in to try to sell the put somewhere around the dollar. So I'm going to start by managing that position in IWM. It's already been a fairly decent gainer, and we still have some time left. So I don't mind just leaving a limit order out there for $1. So if we click on this little button here, and I'll realize this is in the paper trading account, and we're going to try to continue, like, from time to time, we'll be popping into this portfolio and entering these trades. But what we're going to do is we're going to send a trade to the market, and I'm just going to say close at the midpoint. All right. And so now at this point in time, this order is just going to work for 1 day to sell the close at this midpoint. If it doesn't close at that point in time and we don't get out of the trade somewhere close to that, well, then I'm going to put in a limit order and I'll make it just good till canceled at the end of the show to see if in the paper trading app we can close somewhere close to $1 on that trade. All right. So now, inside Caterpillar was the stock that we bought on Monday. We went in and bought a deep in the money call option on Caterpillar that's going all the way out, and you see these expiration dates that are going all the way out to 2025, January 2025, and NVDA is also the same. So we're going to keep selling calls against those positions. If you notice, there's only the deep in the money call option, and let me move this over a little bit. I'm on a little bit smaller screen than normal because I am traveling. So we have the 105 call in Google, i.e. Alphabet. We have the 210 call in Caterpillar, and we have the 320 call in NVIDIA. So we'll just go in order, and it's time to go out and sell some calls. We've already had earning announcements in Caterpillar and in IWM. NVIDIA is coming up, I'm not quite sure exactly when, but we'll be able to tell by looking at the charts. But in NVIDIA, we'll take a peek at earnings. We don't want to sell a call around earnings, because one of the biggest things about a fig leaf position where you buy a deep in the money call and you want to sell a call against that position, right? You do not want to get pegged on that call option. And one thing that can make a stock skyrocket, be right through your strike price and not allow you to adjust that position, is an earnings forecast. So right now we have NVIDIA that is going to be announcing earnings on the 21st. So if we do sell a call, and we'll take a peek at it and see if it's worth doing, we'd have to sell a very short-term call against that position. It just doesn't look like it's going to be feasible in order to do that. But we'll look at it. There's something there. There are some. I mean, 1 week of time premium in NVIDIA is probably worth doing. So maybe we look at the 17th call option just to make sure that it is expired before that earnings date. But let's go and look at these positions. So I'm going to bring this back so we can see our little quotes on the left-hand rail. We're going to go to the options grid. We're going to go to Caterpillar. So in Caterpillar, right now, I usually, when I'm looking at fig leaves, I want to do shorter term, and I want to go a little bit further out. We didn't pay as much for the stock as we would have if we bought 100 shares of stock. Usually, when you're looking at 80 delta, you're going to put up about 20% of what the stock price would be. So we want to whittle away at that by selling shorter term calls against the position. And we always say, and this is where the name of the fig leaf came inside the options playbook, is that you're kind of covered. As far as the brokerage firm is concerned, you're covered because you have the right to buy the stock at a much lower price than the obligation will be to sell the stock. So you're covered as far as they are concerned. Oh, good. We're out of our IWM position. So we're done for that for the day. I don't know if you can see that with my little mug there. So let me just pull it up a little bit so you can actually see that we put that limit in and we close that position. So the IWM trade was a winner and we are done with that trade. All right. So now, and I'll just put the tower on to try to make things less noisy over in that little box where my picture's at. And now what we're going to look to do is we're going to go out about 16 days to the November 24th expiration in Caterpillar. And inside the Trade Hawk options grid, we are showing what a 1 standard deviation move is. So 1 standard deviation move, if you've been on Options Guy TV or watched any of the shows, it highlights what a low probability of happening. A 1 standard deviation move usually means there's about a 16% chance that the underlying stock will finish 1 cent in the money. And it's highlighting that, and I can kind of get a feel for that by looking at Delta. Last Friday's show, we went into great detail about Delta and how it kind of acts as a gauge of probability, how it does act. The non-textbook definition of Delta kind of leads you that way. And so we see the Delta at 16 here. That means there's about a 16% chance by this expiration date, 16 days away, November 24th is the expiration date, that underlying stock is about 1 cent in the money. Now, you might say, hey, options guy, that just sounded weird. I don't think I want to say that again. But hey, Brian, if we look at the probability, I want a 0 probability of that happening. Well, 0 probability means you're going to get basically 0 cents for doing it. The further and further out you go, the less and less money you're going to pull in as you get farther and farther out of the money. So in this instance, we're getting on the bid here 83 cents to sell the 247.50. And if I was doing a covered call that I didn't want to get assigned, this would be the one that I would sell. I would probably sell this option contract, might even sell the 245. Now, that's if I had 100 shares of Caterpillar in my account. Right now, our cost basis is right about where the underlying stock is at. So because I didn't pay as much for the stock, I'm willing to go a little bit further out and take a little bit less capital. So our paper trade today, and we're going to try to execute it here in this paper trading platform, is to sell the 250. And I want to make note of that 250 strike. And if the stock gets there, I do not want to be assigned on this call option. I'm totally doing this just to try to bring in some premium. And the marketplace, we're bullish but nervous on the marketplace. I think that sums up in general all the comments that I've made recently. Bullish but nervous. We're going into the holiday season. We are a little bit bearish and really nervous in September and October. Markets have turned a little bit. The 10 years coming down a little bit on the yields. The Fed's even hinting that we might have right now the futures are saying there's like a 25% chance that in March we actually have a decrease in rates in March of next year. So this is the one that I'm going to sell in Caterpillar. So let's go and click on that bid, and that will put it down below. And I'm going to slide the order ticket over a little bit because I got to get to that send button. And we're looking to sell one, and we're in the paper trading account. So I guess I'll leave it at the midpoint. We'll put it there for a minute or two, and then we'll go back and just execute at the bid. I'm not quite sure exactly, because it's a paper trading account, exactly what the probability is of filling at that midpoint. But we're gonna send it. Let's just send it to the floor. Here we go. Selling at a limit price of 6. We'll give it a little bit. Let's do that. 1 cent at 60 cents. Good for the day. Boom. Send order for short call 250 11/24/23 is the expiration date. Answer is yes. And then if we go over here, and I will hit that events thing, and once again I'll pull that up, and you'll see that we have I screwed up that order ticket, of course. Here is our order to sell. Slide it up a little bit more. Okay, it's as big as I can get. We're going to sell to open 1 Caterpillar 250 strike call with that expiration date. It has not filled. We got a limit price of it of 60 cents. Okay. So going back to the original layout, here's our order ticket, and here is our option grid. Okay, so the next position that we want to sell is Google. So we have the 105 strike call. Google's actually gotten beat up a little bit here. So we want to be a little bit careful on this, but this position is down 20% after earnings. The stock has actually got hurt pretty bad. As an offset, NVIDIA is up about 20% since we put on that trade. So they're kind of fighting with each other, and Caterpillar's just kind of hanging out over here. So we're going to sell a call, but we want to make sure that we don't get assigned on this because we are down on that position. And as always, when we're doing these strategies, we ideally don't want to be assigned. We want to just try to bring in some premium on those call options, hence the reason we go a little bit further out, and hence the reason why we go short term on them. But I just want to be cognizant of it because we are down on the position. When I'm down on a deep in the money call position, I really don't want to, I really, really, really don't want to get pegged on that short call. I want this trade to play out. We got a lot of time on this. We have a hard stop if Google would ever get down to 105. That's our out point on it. Google's not there yet, or Alphabet. I should probably use the right terminology. But whenever I see GOOG, that always makes me want to say Google. So Google right now is at 131, and it's up a little bit today. It got beaten up after earnings, and now the underlying stock is rallying back a little bit. We're going to stay in that same expiration on the 16th, November 24th, and we see the 1 standard deviation move is right around 134. No, that's not right. Okay, there we go. Now we got the right expiration. It should be more. Yeah, 136 is where we're at. sadness that, okay, the 136 is delta is at 19%, and the 137 is at 15%. A little bit less of an underlying. We're going to bring in a little bit less premium. That's the way it is. So I don't want to sell the 136. That's within the 1 standard deviation move. 137 is right at that 1 standard deviation move. 138, I'm tempted, but I'm only bringing in 27 cents. Yeah, I'm going to do the bid. I'm going to do this one. Okay, so here we go. Here's going to be our second paper trade for today and adjusting our position. We're going to hit this one on the bid. We're short that call option in Google. This is really a pain on the smaller screen here, but we're selling to open. A 137 strike, November 24th call at a limit price of 41. That one should fit. Let's just hit the bid. We got a real tight market on it, so let's hit the bid and make sure it sells. Bid's at 40 cents, 41 by, and this is a paper trading portfolio. So, boom, orders going to the floor. Sell. Send order for short call on Google 137.50, 137 strike call with the November 24th expiration. Answer is yes. We'll send that down to the floor and we'll slide this over here. And that's where we're at. And it looks like it already filled. This one did not fill because we were closer to the midpoint, but this one already filled. So we set it at a limit of 40 cents. It filled at that limit of 40 cents, and we still got that Caterpillar order that's in here. All right, so now let's go back and look at our NVIDIA position. So inside the portfolio, here's the call option. We're short the 320 call. We got a fairly decent gain since we put that trade on. So that's good. That's good news. It makes me more apt to want to sell the call against the position. I'm not as worried about getting pegged. And oh, by the way, just to highlight, we are showing that we did get filled in this paper trading portfolio on Alphabet. And here we go. Let's go back and look at our options grid. And we are going to, inside this trade, we are going to NVDA it. Let me send this back a little bit here. All right, so now one thing that's nice about selling calls in NVIDIA is we got some real volatility. In here, the November 24th, and I'm going to highlight this because this is what we were looking at on the earnings date. I've already mentioned that on the 21st is NVIDIA's earnings. So this implied volatility is 59%, where this implied volatility on the 17th, nine days away, is 37%. So the marketplace thinks that something's going to happen between this date and that date, and we know that something is going to be an earnings report. And we got NVIDIA up strong today, up around $4 in this account, almost around 1%, not bad. And so interesting enough, let's go on in and look at selling NVIDIA. I'm going to pull this over a little bit more and look at a 1 standard deviation move for that expiration date, November 17th. November 17th. I always want to make sure that you do have this highlighted and that it's showing you it right over here. 465, 1 standard deviation move. 15 delta right there is 495. Getting some decent premium on that, $2 by 208. So I have no problem going up to the next strike. I might even go to the 505. Yeah, this is mainly because we have such good volatility on this. So 505 or 510. It's a toss up here. This delta is at 8% on the 505. We did pay a lot of juice on this one. Let's do the 505. I like the fact that we got to break through the 500 level to get to the 505. Big round numbers going into earnings are kind of hard to break through. Just in general, it's no real reason why, but it seems like a big round number like 500 is kind of a resistance point in the underlying stock. So I don't mind doing this one. We're going to sell the 505. We're going to bring in some real premium on this call. Once again, we got a tight market, 118 or 119 by 118. So we're probably just going to hit the bid. And so here we are. November 17th expiration, 5:05 call, sell to open. I'm going to hit the bid of 116. Going to slide this over a little bit and hit send. Confirm. Send order for short call NVIDIA 5:05 expiration date 11/17. Answer is yes. And boom. So it's showing us that the order is in and it's open, but it's not filled yet at this. There we go. Now we're filled at a limit price of 116. So we have, if we go back to our portfolio, we see that we have our position on in Google and we have our position on in NVIDIA. So Caterpillar is still open. And we put that limit order in. We also filled and got out of our limit price on IWM. So then we're going to sit and look at our Caterpillar position. So let's go up and look at the one that we have that is open. And sell to open at a midpoint. We're going to change that down. Let's hit that at 58. Can't really work orders as much so on the paper trading platform as you really can. So now what we're doing is we're going to be canceling our limit price at 60 cents. The bid right now is 58 cents, and we're going to replace that and say yes. And then boom, that order goes to the floor. Let's bring it back, go check it out and see where our status is at. And I'm going to pull up this tower a little bit. Actually, you know what I can do with that? Let's, there we go. Now we're all the way up. And there we go. We filled at an average price of 58 cents on the account. So let me slide this order ticket on down. And here's our events tower. This is everything that we accomplished today on the show. Now, if you have any questions and you are in the YouTube platform, excuse me, please feel free to put them in the chat box. If you would like me to try to address any of the questions on this show, I'm happy to try to do it. And we always want to make this a very interactive scenario here on Options Guide TV. So always I'm up to try to address any questions that you have on the IWM trade, on any of the fig leaf positions that we just adjusted inside our portfolio. Just let us know. Toss them out there. All right, so let's go back and look at the portfolio and then finish up today. If we don't have any questions, we'll just move on, and we'll be back this Friday for the next edition of Options Guide TV. So let's pull it back down to where we're at and pull this back over. We see all the fills that we had in our account today. Go over to the portfolios, and there we go. IWM is gone. Caterpillar, Google, and NVIDIA. So we will add a couple of more deep into money call options. We might even get a little frisky and do 6 or 7 positions overall. Ideally, I would normally, if I'm doing a portfolio of deep in the money calls, I would normally just trade 5 stocks total. That's what I'd be looking to do. It's still, to me, a speculative. Well, it's not speculative. I do feel like we are actually using the deep in the money options as a surrogate for the stock. So it's much more conservative compared to any of the trades that we just did around earnings, obviously. And we're going to try to build this portfolio, and we're going to ride it through the next year. And we're going to adjust the trades, and we're going to deal with the trades for the entire year inside this awesome feature that's inside the TradeHawk options trading platform. So there you have it. All right. Let me get my screens all back to normal. I don't see any questions inside the chat box at this point in time. All right, so that's going to be it for this edition of Options Guide TV. Please click subscribe, ring the bell, make sure you get all the updates for Options Guide TV. Pound that thumbs up, that helps us out, and we'll see you this coming Friday for the next edition of Options Guide TV. Thanks for coming, everyone.